I'll get started with your question first, bro. You were asking me what ICT means by time and price, and that's a really good question because that's what ICT is all about. It's all about time and price. And when you think about it, and time and price is the essence of your trading, what you're going to be looking at, your levels, your analysis. So you want to base your trading, your entries and your exits around time. You want to also be basing your analysis around time, whether it's on the 1 minute, whether it's on the 1 day, whether it's on the weekly. It's all around time. But what does he mean by price? Let me show you real quick. So let's take Monday for example, because Monday was a very interesting day. The problem is, how can I use it in the chart? Alright, let's see how we can use it on the chart. So we're going to go to the 15-minute real quick, and we're going to zoom into Monday's chart. So this was this past Monday, and we're going to be focused on this past week because it was the most recent week. We're just going to be focusing on what we did this past week, because we obviously had a pretty big rally up, but we're going to really dig deep and analyze why we went up. So this is Sunday. I already have each day marked out by its section. So we have Sunday, Monday, Tuesday, Wednesday, Thursday, and Friday. So we're going to be digging deep into Monday's chart, and for those of you who just joined, we're going to be looking at time and price and what it has to do with trading and why you want to really focus on time and price. So we're going to really dig into time right now, and we're going to see what time has to do with our trading. So for example, Monday midnight open at midnight. This was our London session. So if you haven't yet got into the market maker primer course in ICT's videos, let me show you guys quickly what it is. If we go here and we go to the ICT Forex, so episode 5 and episode 6 are very, very useful. Now this is a bit more advanced. He talks about the London kill zone, the New York kill zone, and what a kill zone is when the algorithm seeks liquidity. And why does the algorithm seek liquidity? Because of time. It's all based on time. So the London kill zone is going to be from midnight open, either on Monday or Tuesday or Wednesday or Thursday or Friday, but it's always going to be at midnight. From midnight open to I believe it's 5. Now give me 1 second. So since I live Pacific Standard Time, I'm West Coast, so my time is different. So I gotta like do the math real quick. So New York time, it's gonna be 3 a.m. to 5 a.m. I had a little brain fart right there. And this is gonna be our London session. Right here. This area right here, from here to here, is gonna be our London session. So for me, in Pacific Standard Time, is going to be at midnight. But for New York, since it's 3 hours ahead, it's going to be at 3 in the morning. So that's why I was kind of like, wait a second, this isn't right. So from these times, and if we zoom into the 2 minute, if you don't have time during the day to trade, that's why ICT tells you if you don't have time to trade during the day, trade the London session. Why? Because it can provide a high quality setup. And the thing about time is your kill zone is going to be in this area, in this these 2 red areas right here. That's going to be your kill zone. Why? Because this is when price is going to seek liquidity, either highs or lows. So if we take Friday and we take this high right here, this is a high from Friday before we closed, and we extend that in time. What did price seek to? We seek to Friday's short-term high or intermediate term high. So what price did, if we draw this out in time, is we went lower. We went lower to take out what? These buy stops. Once we took out these buy stops, what did price seek now? We went to seek sell stops up here. So, and this was all in the matter of from 3 to 5. Now, let's say I was trading this time frame. Let's say I was trading this London session. Where would I take a trade? And I'm sure some of you have already seen a model and where you would place entry. But if I were to take a trade during this times frame, I would wait until I see an imbalance. After liquidity being taken. So you should have a checklist of 3 things when you're looking for a model entry. I'm going to write it out right here. You should probably write it down in your notes as well. So number 1, you want to see liquidity get taken. Liquidity get taken, either higher or lower. In this case, you want to see liquidity. Since we're bullish, we want to see liquidity get taken lower. Where was liquidity taken lower? Liquidity was taken lower right here. Right there. Let me put my magnet on. So if we zoom in to this area right here, we had this low get formed right before 3, and these were probably people buying this. These were probably traders buying the breakout. You know, they turtle souped it. They caught a nice long. Price retraces, comes down right here to that level right there, and it makes an equal low, and it comes all the way back up. Retail traders see that this level as support right here. And this is everyone trading London session, by the way. So I do not personally recommend trading London session unless your schedule doesn't allow you to trade New York session, because New York session you're going to find the most precise, accurate levels, and you're going to get better price action and whatnot. But this is just for you guys to see how to find setups during London session, and then we're going to go to how to find setups during New York session. So London session created equal lows right here, broke them, came back up, created more equal lows right here, came back up. Then after we took liquidity here, we came down to take liquidity here. So now everyone that went short here, S is for short, everyone that went short here has their stops up here. Everyone that went long here in this area has their stops right here. So these guys got taken out and these guys got taken out. So now that the algorithm has taken out both sides of this short-term accumulation, we do something that's called manipulation, and this is called the Judas swing, which is here. This is the Judas swing right here. This entire black candle, that's manipulation. And why is that manipulation? Well, because we didn't manipulate higher after this accumulation. So if we want to see higher prices, we want to see manipulation lower, and vice versa. If we want to see lower prices, we want to see manipulation higher. And everything is fractal. So everything that happened here can happen on, this is a 2-minute chart. Everything that happened on the 2-minute chart or the 1-minute chart can happen on the 15, the 1 hour, the daily, the weekly. It's not only subject to the 2-minute. So we want to look for accumulation, manipulation, and then lastly, distribution, which is this section higher. Now, in this entire area here, this entire accumulation manipulation phase, we are not looking for a trade. We want to stay patient. Now, why aren't we looking for a trade? Well, because if you're looking for a trade in manipulation mode, you're going to be manipulated, obviously. That's why it's called manipulation. Let me just get rid of all this. I feel like there's too much on my chart, just so we could clean it up a little bit. Real quick. Alright, so I'm just gonna leave accumulation, and I'm gonna highlight manipulation, which is here. Accumulation, manipulation, and then distribution higher. So we want to be taking a trade in distribution. How do we find distribution? Well, now that we don't know exactly as price forms, we don't know exactly when distribution is going to happen, but how to find distribution is you want to find distribution at the below or at the opening price. Where was the opening price from the London session? At 3, right? This gray line right here. So if we draw the opening price out in time, it's going to be that black line right there. So we want to be looking for a trade below or at London session open, which is this black line right here. So if we take our highlight tool, we're going to highlight this area, and we're going to be looking for a trade below this yellow area right here. Now, in general chat, I want you guys to tell me what, before I move on, I want you to pause and look at the chart and tell me what you see for a long trade if you want to go long. I already found it. Before I go on, I want you guys to take this time to look at the chart and tell me what imbalance, what PD array do you see? Do I see a breaker block setup? Do I see an order block setup? Do I see a fair value gap setup? Quickly tell me what you guys see. Yep, some of you guys know what's up. I like that. I like that you guys are learning. I know there's more people in here besides 2. The question was, what do you see to go long in this setup here? Below midnight opening price. Now that we see that we had accumulation here, we had manipulation lower, and we're looking for higher prices, what do we see now? Okay, yep. Perfect. Alright. So it looks like we got most people, and you guys are all correct. And that's what I like to see. I like to see that you guys are learning. So you guys are correct. So if we are all looking at the same thing here, I'm sure we're all talking about this one right here, right? We're all talking about this fair value gap right here. But why this one? Why does it have to be this one? Well, let me tell you why. So if you guys haven't yet watched the A through Z playlist that I usually tell you guys to watch when you start off your ICT journey, I like to introduce you to the PD arrays first. I like to introduce you to the fair value gaps. I like to introduce you to the order blocks. So the fair value gap is going to be your main source of your trade. And what the fair value gap does is it tells you where displacement is and where displacement can happen. But if we stack the fair value gap with another PD array, it's almost like a wall. Like price will not get past that wall. Now, besides this fair value gap here, what other PD array do we see that it supports price at this level? Just let me know. Let me know in general chat. What other PD array supports this fair value gap if we look to the left? Order block, yup. Okay. You're right, Sufan. Yes, we always want to buy below the opening price. That's when we're going to be in discount. Order block, or yep, you guys are correct. An order block. And where is that order block? It's going to be right here. Right there. So, for example, we couldn't have had this order block here, and we would have still been confident about this fair value gap. But, since we have this order block here and this fair value gap, this is like confidence. Like, our confidence level should be, our alarms in our head should be going like, boom, like this is it right here. I should be taking this trade. Now, if we take this trade, where should we put our stop loss? Now, this is the tricky part. The easy part is finding the trade. The easy part is finding the imbalances and finding the entry. Once we know where drawn liquidity is, let me quickly put a little eyeball up here because that's where we want drawn liquidity to be. That's the easy part. But managing our risk is the hard part, because sometimes in your head you're like, damn, I'm really putting on risk into the marketplace, and I could really be losing money right now. So if we enter this trade, where would we put this stop loss? Low of the first candle of the fair value gap. Yep, I like that. I like that. Okay. But let me ask you this, Raquel. We have another fair value gap right here. Do you think the algorithm might want to seek this fair value gap? Keyword might. Because what I like for example, Piggy has a good example on his that's happened. I believe it was this past week. I don't know if you want to tell us, Piggy, how where we have sometimes multiple fair value gaps in a displacement leg. So what price will do is it'll seek, for example, in this case, it'll seek the lowest fair value gap, because obviously in this leg it's in discount. and then it'll go higher. So in my personal experience, I would put it either below this candle's imbalance or below the swing low. Now some of you are saying, damn, that's a little too much risk for my taste. But if I'm being honest, if you want to be successful as a trader in this marketplace, we're gonna have sometimes where if you put your stop loss here, it'll come down, seek this fair value gap, deliver it, and then head higher. So you are correct, Raquel. I like that you thought of a really good point below the imbalance, but we want to be safe. We want to, we can't always be too safe. So I would say below this stop. But in this example, it doesn't even go down there. So we don't even have to be worried about having too much risk. So let's say we entered at 1 tick into the fair value gap. Right. So like Piggy said, we should expect, keyword expect, price to reach into the second fair value gap. Not that it's going to, but we should just expect it to. So in this case, this trade right here has a stop loss of, let me zoom out a little bit. This trade right here has a stop loss of 2.50, 2 points and 2 ticks. That would be about, what is that, 10 ticks? You're risking 10 ticks to make 7 points and 1 tick, which is about, I believe it's 50. So you're risking 10 to make 50. This is I believe or somewhere around there. The R to R is 3. So you're risking 1 to make 3 in this scenario. That's a really good R to R. My R to R is typically 2 to 1. This is a 3 to 1 right here. So in this scenario, we don't even have to, if we were risking, like Raquel said, right here, right below this fair value gap, that's 1.50. For usually on my typical trades, this is London session by the way, for my typical trades, I'm at 5 points. So I risk 5 points to make typically 10. So this is my R to R. And we were in drawdown probably 1 tick for this trade. So I'm really happy that I'm really proud of you guys. You guys are one step ahead of the game. You guys already knew where the imbalance was. You knew where to enter, where to put your stop loss. And also like Goldberg said, if you guys did watch the order block on the Arjo, because I'm pretty sure most of you guys know about Arjo. Really good mentor. I love this guy. This guy has a through Z guide.
Hello,
and if you watch his A through Z guide, I already watched it. When he goes over order blocks, he talks about how when you have an order block, for example in this case, you want from body to body, you want it to respect the sensitive areas of the order block are going to be the top and the mean threshold, the 50%. So in this scenario, we respected the top, but let's say we could have kept going down. We would have to respect the 50% for this order block to be valid. And that was if it was only the order block without a fair value gap. But since we had the fair value gap, the order block and the fair value gap matched up to send price higher. So that was an exceptional trade. This is a London session, by the way. So this is we're just going over. This is more of like a low probability condition in this time frame. So from 3 to 5 is London session, and we're going over Sufane's question: why do we have to focus on time, or what does time and price have to do with ICT? And we're just going over how if you really just focus on your times, you can find optimal trade entry. So quick recap of what we just went over. So we had it looks like a 2022 model entry. So we have a high, a low, a high with displacement, and a retracement into that fair value gap with the displacement higher. So this is a perfect 2022 model entry right here. So liquidity taken above, liquidity taken below, accumulation, manipulation, distribution, and in that distribution leg, you want to see a fair value gap, or an imbalance, any imbalance, whether it's an order block, a fair value gap, a breaker block. There's multiple PD arrays. So in this case, it was a fair value gap, and you want to enter off one tick into the fair value gap, or if we have a PD array supporting that fair value gap, you know, you could enter at the PD array, or you could just keep it at, you know, one tick. So that was just a quick recap, and also how we went over the power of 3, how we have the opening price. So this is the power of 3. If we have the opening price at 3 a.m., we want to be buying at or below. So in this case, let me bring my highlighter out. This entire area right here is going to be our buy area. This is going to be our discount area. If we're looking at, if we go to a store, like let's say we go to the grocery store, would you rather buy milk at 10 bucks or 3 bucks? Obviously at 3, right? So milk up here is at 10 bucks. Milk down here is at 3 bucks. This is our premium and this is our discount. And our opening price is our normal price. Let's say milk is at 5 bucks.
Ibrahim, here is the juice.
So let's say milk is at 5 bucks right here. We could buy at 5 bucks. That's still like it's still, you know, it's still a good price. But obviously we would want to seek lower prices at 3 bucks. So that's just a quick example of how discount, you want to be looking for price to go to discount, because that's what the algorithm will do. Some tests will displace higher, and the algorithm will be like, okay, let me give another chance for those who missed the leg higher to get another chance to enter. 3 to 4 is silver bullet, but ICT said we need a kill zone. 2 to 5, why you chose opening price 3 to 4. Okay, yes, so the silver bullet is only 1 hour. Is only 1 hour of time. But the London session is from 3 to 5. So I never said the silver bullet is 3 to 5. The silver bullet is 3 to 4. 3 to 5 is the entire London session. So this is the London session kill zone, but the London session silver bullet, let me make that clear, is going to be only 1 hour of time. SB. So this is our silver bullet, 3 to 4. From 4 to 5 is our normal. You see how price has more expansion in the silver bullet area versus more of like a consolidation during the 4 to 5. Right here, we're more in like a little box versus over here, where we do have a little box, but we have an expansion higher out of that little box. So that's what I mean by the London session kill zone. It's a big time frame, but if you narrow it down to the silver bullet, then it's only from 3 to 4. And with this being said, with the silver bullet in mind, let's quickly go to our silver bullet. Oh, I didn't finish our checklist. Let me finish our checklist. So, okay, step 1, you want to see liquidity taken. Step 2, market structure shift, or I like to call it break of structure with displacement. This is the more like technical side. Break of structure with displacement. Now, what is displacement? You want to see the candle to have energy. You want to see energy behind the candle. You don't want just like a little candle to move up higher and you're just like, bro, what is that? You want that thing to move. For example, this candle right here, this down candle, that one moved. This candle up here, this up candle, that one moved as well. So those are institutional candles. Those candles have orders behind them, big orders. So that's what I mean by displacement. And last but not least, step 3, imbalance, or our PD array. Alright, let me make this bigger if you guys want to screenshot that. That's your checklist right there. Whenever you're looking for a trade during the silver bullet hour, that should be your checklist. If one of these are missing, you do not take the trade. You do not, I repeat, you do not take the trade. So, Gonna wait for everyone to quickly screenshot that, and we'll move on to our New York session. So this was London session. We will be going to our New York session. Let me know in general chat when you guys are ready to go. Looks like we got Sufain. Sufain's ready. Only one person's ready? Wait, Awakening's ready. Alright, I'll give you guys one more minute. And then we'll move on. Raquel's ready. Alright, I'm gonna move on Rafa and Piggy. So alright, let me get rid of, actually I'll just leave those on there. So our New York session, what times are those? So we have 2 times during the New York session. We have the AM and the PM. Now how do we know which one to trade? Now this is the hard part for a lot of traders, because we don't know which session to trade. So we have the AM that starts at 8:30. I should probably make this a little darker. Hold up. We'll go 50% right here. Alright, so moving on to the New York session, we have the AM that starts at 8:30. This is typically at 8:30. That's when news releases. That's when the algorithm starts spooling up for a move. We'll go over how to trade the 8:30 section right now. So from 8:30 to 12, that's our AM. Well, 11:59 technically, but that's our AM session. From 12 to 1, that's our no trade zone. We don't trade this right here. No trade zone right here. From 12 to 1. And then from 1 or 13 to session close is our PM session. So let me quickly make this a little bit shorter so we could have more so we can see the PM session. So quickly let me put AM, let me put lunch, and let's put PM. Now, how do we know which one to trade? So this goes back to if your schedule allows it. This also goes back to the algorithm. So which one, so on Monday's price, which one would you prefer to trade? Would you prefer to trade the AM session or the PM session? Let me know in general chat. And it's pretty obvious. It's pretty obvious which one you guys would prefer to trade. The PM, the AM, PM, PM. So, Sufain, quickly tell me why you would rather trade the AM on Monday's session. This is Monday, by the way. Monday, June 12th. This was this past Monday. Quickly tell me why you would trade the AM over the PM. Now, while he types that out, before overnight, our overnight price action, we had a large expansion, right? Like we had a move higher, a very healthy move higher, and a very healthy move lower. So we already had expansion during the overnight session. So the algorithm already did what it had to do. It already reached a strong liquidity, higher and lower. But we'll go over, I'm going to wait on Sufain real quick, see what he types out. For me, I want the 9:30 open. I want to see the Judas swing, and then I want to enter the macro 9:50 to 10:10. Perfect. Okay, I do love that macro as well, Sufain, and I do agree with you. 9:30 open is going to be right there, and our macro is going to be right here, from 9:50 to 10:10. So let's zoom into this area real quick. So we're gonna have our 8:30. So this is when the algorithm wakes up again and it's like, all right, let's see what I have to do. We have our 9:30 open, which is our indices open. Here. Let me get rid of the... Actually, no, I'll just leave them. So we have our 9:30 open, which is this one right here. We have our 9:50 macro open, and we have our 10:10 macro close. But what do we notice here? Do we have expansion higher or lower? Do we have liquidity get taken? Do we have displacement? Do we have an imbalance after that displacement? Not really. Okay, so we have this liquidity get taken. We have consolidation. Correct. Yes. Yes. You are right. And that's why a lot of us said PM session. So let's quickly go over why we don't want to trade this AM session. So like I said before, large expansion higher, large expansion lower. Okay. This makes the AM session look like this. But if the overnight session looks like this, it makes the AM session look like this. You know what I mean? For me, I'm waiting no entry, take liquidity. Yes, you're right. You want to see liquidity, a high time from liquidity get taken before an entry. You're right. So we have this London low, I believe, get taken. Also before at 8:30 we have that low get taken. So we have two liquidities get taken. Okay. But real quick, liquidity taken. It looks like this is our Judas swing right here. So let's say you were trading this right here. Let's say you see this this liquidity get taken and you're like, okay, that was our... So we have accumulation, manipulation, and now we're looking for higher prices, distribution, right? The next candle looks like this. This is our next candle, this big white candle right here. And this is all according to plan. You're like, oh, damn, okay. So it looks like we got... Wait for liquidity to get taken or you will be the liquidity. Exactly, yes. So you want to wait... So we got liquidity get taken here. We got distribution higher. And it looks like we have an imbalance right here, right? So let's quickly mark out that imbalance. So now that we've marked out that imbalance, let's see what the next candle does. Looks like we entered that imbalance. And this looks like a normal 2022 model entry, right? So let me... Bro, this thing is in the way. I can't click on it. Alright, so just pretend the fair value keeps going to the right. So let's say we would have entered right there. Okay, so now you're down and you're like, damn, so did I take a bad trade? Let's see, let's put our R to R tool right here. We have 5-point stop. So it looks like our stop is at the swing low and we're going to be targeting this swing high right here, which it looks like we have equal highs right here. So, okay, so we go back up a little bit. Looks like we keep going up. We enter our macro, so let me get rid of... Okay, no, never mind. So that line is our macro. So now that we've entered our macro, okay. Oh, it almost held. Did it hold? I can't tell. Yes, it did. So we were inches away, one tick away from our stop getting hit. And our TP still hasn't been hit. Now, if we were in normal conditions, we would have drawn to liquidity up here. But this is called the search and destroy profile. Search and destroy meaning it's going to target, it's going to chop like this, and it's going to target a high or a low, and it's just going to start taking liquidity. And if we keep moving our R to R tool here, and stop loss hit right there. Why did this happen? Why didn't it go to our TP? Well, so I'll have this in my study zone. And the Discord, if you quickly go over to the Discord, and I'll tag all of you guys. I'll tag reply. I'll go at member. I want all of you guys to click to see attachment, and it's gonna take you to it. Now this is by Sir Pickle on Twitter, very knowledgeable guy. Credit to him for this this picture right here, but when to expect seek and destroy conditions. And we know we have before high impact news, blah 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 blah, but right there I believe it's the 5th point. large range overnight move, London session. Avoid AM, focus on PM session. And what did we have on Monday? We had a large range overnight move, London session. Avoid AM, focus on PM session. And that's exactly what happened.
Oh, beta, ले जिसको हरी हल्ला pass. Can you take him? Today.
So what we do is we kind of either, if you see a large range overnight move, literally just go back to sleep. That's what I do. I know this is kind of like damn, he's not following his rules, but it's like it's not even worth it. It's this. I woke up on Monday, and we were in the live call, and we were just sitting there watching this happen, and I was like, damn, this is boring. And we literally kind of just like, it was like really just a waste of time. So I would rather get like a couple more hours of sleep, come back recharged for the PM session than to trade this, honestly. This is just stressful, especially when you're in a trade. Like if you were in this trade, you would have entered this trade at 9:38 and you would have gotten stopped out at literally 1 hour. You would have been in this trade like you would have been in this trade for an hour, and you would have been like stressing out like, dang, is this going to go in my favor? And then you finally got stopped out an hour after. So it's like not even worth it. So if we go to the PM session, so like we said before, we all saw the PM session have a large range move. Now let's study this large range move. So we don't trade we don't trade the lunch hour. So if we were to hop back on, if we were to trade the PM session, what time, you're gonna ask yourself, what time do I trade at? So my favorite times is from 14 to 15, which is gonna be from 2 to 3 New York, and that's gonna be our PM silver bullet hour. Can you tell us why you chose PM? Well, like I said before, you would choose PM because of the seek and destroy conditions. So I tagged all of you guys if you go in the Discord, if you go to the study zone, I tagged you guys. If you go to click to see attachment, it should take you to it. Let me know if you guys saw it. Maybe I have to like explain myself again. Did you guys see it? Alright, bet for sure. Yeah, so the reason I chose PM, Sufan, was because of the large range overnight move. Now, a lot of us have like different perspectives on what a large range overnight move can look like. But for example, if midnight open is here, and all of a sudden we get displacement higher, all the way up here, how many points is this? This is a 13-point move during the overnight session. The overnight session really shouldn't be that long. Like the overnight session is typically like max 5 points. This is double. So when you see big moves like this during the overnight session, you want to avoid the AM session, because if the overnight session looks like this, like very expanded large moves on both sides, then the AM session is going to look like this. Since liquidity has already targeted the high and the low, you know, the AM session really has no liquidity to target. It's just going to do this. It's just going to go back and forth. Where do I go? Where do I go? And then the algorithm boots back up PM session up here, and it's like, okay, now I know where to go. And it finally, let's say we're targeting the Friday high up here. If it wants to press right there. So you see how we didn't target it AM session? So let's say we're targeting it PM session. Right there, we got it. And what time frame was this during? This was during the 14 to 15 silver bullet hour. So if we were to trade the PM session, you can start at 13. That's the good thing about the PM session. You have more time to work with. You can start at 13, you can start at 14, you can start at 15, because it's very volatile. So real quick, we're going to go over the PM session and where would we take our trade at. Hold up, give me 1 second before we get into it. If you guys have any questions on what we just went over, let me know. I'll be right back. Just type it in chat and I'll get back to it in like, give me like 2 minutes.
तेज पड़ा है अलिफ पे तेज पड़ा है आइए
I'm back. Would you be able to explain the macro time? Yes. Would you like to see like only the New York session macro times? Would you like to see the silver bullet macro times? Which ones? Because there's a difference between kills. There's a difference between the silver bullet ones, and there's a difference between the macros. I just don't know what it is. Oh, 100%. Yeah, I'll let you know. All right. So let's quickly go over the macros. So I'm gonna clear my chart right here. I'm gonna fully clear my chart, and I'm gonna only mark out the macros. So remove 54 drawings. So if you're looking at a naked chart like this, and you're like, where do I put my macros? So there are multiple macros, and I could here action. Matter of fact, I want you to, if you go to the ICT study zone, and you go to the pinned messages, I actually, in April, I pinned all the macro times that you should be aware of. So those are all the macro times in the ICT study zone in the pinned messages, and you could screenshot that, or you could write them down, but we'll go over them right now. I'm also going to tag you guys in at member. Check out that attachment. So if you click on the most recent one I tagged you guys in the study zone, and you go to that one, those are going to be your macro times, your AM. It's gonna categorize them by AM and PM. So it shows you the opens and the closes. Alright, so now that we know where the macros are, let's mark it out on our charts. So if we look at the, hey, can you explain the IPDA and the CBDR? How do we use them with ESNQ? Yeah. Of course, yeah. I got you, Rafa. I'll explain them right after I get past this question of the macros. So we're gonna quickly go over macros, and then I'll go over that. So let's go over our macro times real quick. So we have our first macro from 8:30 to 9:10. Now this macro isn't that, I'm gonna show you guys which ones are significant and which ones aren't. So 8:30, I'm gonna make them red. 20-30%, so we can see the wicks. So our macros are going to be right here. So we have our first one at 8:30. From 8:30 to 9:10 is going to be our first macro. Now this one isn't that important. This one is more of like, so the thing about this macro is at 8:30 you want to be looking for two things. If you wake up at 8:30 New York time, you're going to be looking for two things at 8:30. You're going to be marking out your short-term swing lows right there. Let's make these black. And right up here. And you're going to be marking out your short-term swing highs. So at 8:30 you're going to need to mark out your short-term swing low and your short-term swing high. And what this macro does is this macro is going to seek short-term high / short-term low I spelled that wrong. Let me make this 14. So this macro, let me also write out what kind of macro it is. 8:30 to 9:10. Alright, just so we can screenshot it in the future. So this macro, 8:30 to 9:10, this is going to be our seeking short-term high, short-term low macro. So this one isn't that important because you're not going to get much of a move in this macro. You're going to be mainly just getting, like, let's say you would have entered off of, I don't know, there really isn't an imbalance here. There's no displacement. I don't see a trade here, really. There's nothing to enter off of here. Maybe this inverse fair value gap? Alright, let's just say you would have entered off this inverse fair value gap right here. So you would have caught, I don't know, it's not that much. You would have caught a solid 3 points targeting this high. Now 3 points is good, but it's not what we want to be looking for. So this macro isn't that important. We want to be looking for, you know, a solid macro where, you know, you can get a good move from 5 to 10 points. So how do we know which macro is the good one? Let me show you real quick. So that's the 8:30 to 9:10. Let's go to the next one, which is going to be 9:50 to 10:10. Now this is the good macro. Like, I love this macro. And we were just talking about this one with Sufain. Sufain mentioned it. And I like that he mentioned it because he knows what macro is important and which one isn't. So we're going to make this red. Okay, and then we're going to go to 10:10. Now, once again, we're trading on Monday, so it's not going to be the best price action. Maybe I should show you guys the macros on Tuesday instead of Monday because we might get some better movement. Tuesday, let's go to Tuesday. Maybe we have some better movement on Tuesday. Let's go over the 9:50 to 10:10 macro on Tuesday. So 9:50 right here. Let's make this a little bit higher to 10:10 right there. Now, if we take this macro, now what does this macro do? This macro seeks one side of the market, either a high or a low that's been created during the AM session so far. So in this case, if we have a bias, what do we see so far on this chart? Now I already know, like, we already know what happens. We obviously go down and we seek two levels. We seek this liquidity here, and I think we reach into the lower level. Give me 1 second. We do not. Okay, so we seek this liquidity here, right? But what do we see in this macro? Or what, I mean, the better question is, why do we go down? Let me know in general chat why we went down. What did we do before heading lower? And I'll explain to you guys why we headed lower. Real quick in general. Buy side liquidity. Yes, Sufain. Yes. Perfect. Buy side liquidity taken. Right there. That's perfect. You nailed it right there. So, boom, we took buy side liquidity right there. Bro, why is that so big? Okay, there you go. We took buy side liquidity there. Now, what do we look for? So, remember our checklist? Step 1, liquidity taken. Step 2, break of structure with displacement or market structure shift. They're both the same, but they're both different. Either or work. So we have a market structure shift here, right there. Okay. And we have a couple PD arrays we could enter off of after this market structure shift. We can be aggressive and enter off of here. It might look better on the 1 minute, honestly. Where is it? Where is it? It's right here. Looks a little bit better on the 1 minute. Okay, so we have our fair value gap. Okay, right here. We could be, this is an aggressive entry right here. This is aggressive because we still haven't gotten our market structure shift or our break of structure with displacement. This is just an equal low, okay? But here we get a market structure shift, okay? So right there we got our market structure shift. So this is when the idea pops in your head that says, oh hey, I should be looking for a trade. That's when the idea comes on. Liquidity taken, step 1. Step 2 happens right here, market structure shift. Step 3 is after this liquidity gets taken, in this leg, we want to be looking for an imbalance. Now, let me delete this and tell me what keyword two imbalances you see during the 950 to 1010 macro. Let me know in Gen. What 2 imbalances do we see? Perfect. Perfect, perfect, perfect. You nailed it. Order block and fair value gap. Now, where are they? Right here. Boom. Order block. Fair value gap. And order block right there. Good job, Awakening. So this fair value gap was a full rebalance. As you can see, we went all the way to the top, rebalanced it, and came down. Or we could have entered off of the fair value gap, or there was also this order block supporting it. So there we go. And I just want to see how this order block held up. Did it hold the 50% of the order block? Look at that. So if we draw the 50% of this order block, where's the mean threshold? Right there. So at the mean threshold, we respected it, so that gives us even more confidence that we respected it and we wanted to go lower. Did you turtle soup this? Yes, I did turtle soup this in the live call. So I turtle souped it up here. And matter of fact, I have the recording right here. So I turtle souped it up here, my entry was here. And this was on the 2 minute. So we made this fair value gap right here. As you can see, this is as price forms. We came up, 50% of the fair value gap. We came down. I moved my stop above to this high. And then this is where Piggy entered. Piggy entered right here after this order block and fair value gap. Piggy entered right there, and we rode it all the way down to 4,400. I called that out in the live call. So this play right here is the same play. We're just analyzing it right here. So this was, my entry was up here. This was my turtle soup. We'll go over what turtle soups are after I answer Awakening's question and Rafa's question. So we have multiple entries here. We have turtle soup, we have fair value gap, we have order block, and what do we target after we enter? We can target a few things actually. So if I delete all of this, so let's say we enter right here off of this fair value gap. How do we use the fib to manage our targets? So we can either target this low right here. This is your safe target. This is your swing low target that you should always be targeting. This is called the low hanging fruit. And the low hanging fruit, basically in essence what it is your lowest or your easiest point to target. It could be this one right here, but that isn't much movement. That's like what, Let's say you enter 1 tick. Hold up. Oh shoot, that's 5 points right there. That is 5 points. So you could have targeted either 5 points, which is honestly, you could call it a day right there if you target 5 points from entry to exit, or you could target, which is what we targeted in the live call, right here, 4,400. And this is called the low-hanging fruit, which is your swing low that the market will most likely target before heading higher. Now, let's say we would have gone lower in normal market conditions. Let me get rid of these levels. If I draw the fib out from the top of this leg to the bottom of that leg, and when I take the OTE, it's going to give us, like, it's going to spit out all these random numbers right here, right? Now, what the heck do these mean? Now, why this leg? So, this is the leg we're choosing our imbalance off of. That's number one. And number two is because why would we choose this leg if this one has already been broken? This leg hasn't been broken yet. We retrace into OTE, and then from here, this is our OTE entry. We target either the half standard deviation or the 1. These are your safe targets right here. Half or the 1. Now obviously we didn't get to the 1. That's why you always target either the half or the low-hanging fruit. Low-hanging fruit, your swing low is your super safe target. Your half is your safe target, and your 1, you're kind of pushing it. You're kind of getting a little too greedy here. By the time you get to 1, you should be already exited 80% of your position. So if I put on 10 contracts in this trade, I should already be out 8 contracts, either having 2 running or 1 running to these levels, to the 1, 1.5, 2, or 3. You should not be holding full position all the way up to 1, because you're kind of like just pushing it at that point. So with that being said, yeah, that's kind of how the macros work. So that's the 950 to 1010 macro. There's also an 11, so let me get rid of all this. We'll leave that right there just as an example. So if we take the 1050, which is right there, let me zoom out a little bit. $10.50 to $11.10. Make these red. Alright, so this is our 950 to 1010 macro. It looks like we had a nice expansion lower. Now if we go into our 1050 to 1110 macro, it looks like we didn't get much movement, right? So just like the overnight session and the AM session work, it could also work with macros. So since this macro already had a lot of movement behind it and in front of it, this macro might not have as much movement behind it or in front of it. Okay? But it could be vice versa. Let's say this macro was kind of whack and we didn't get much movement, then this macro can be your second opportunity to get an entry. So let's see what we could find in this macro. So in the bigger scheme of things, oh my gosh, we are over here. So in the grand scheme of things, it looks like we took liquidity here, we took this low, so once we take this low, what might the algorithm want to target? This high, right? So that's our target. But how do we know that? Well, if we take the range for the day, so from 8:30 to the current high, where did we tap into at the low? We not only did we enter discount, remember what we talked about? We talked about discount, how at discount we want to be buying at or below discount, but we also tapped into the optimal trade entry area. So now that we tapped into this optimal trade entry area, this gives us more confidence that, okay, so we tapped into optimal trade entry, we might want to target this high. So now that we have that in mind this is the 5 minute, now we want to go down to the 1 minute, or maybe the 2 minute. I like the 2 minute more. See what we have on the 2 minute. Okay, so looks like we tap into OTE on this box right here. We come up higher. Okay, so we have market structure shift with displacement. So if we only specifically traded the macros, we probably would have missed this trade right here. So I want you guys to tell me what we see once we take this liquidity here. Starting from here, I want you guys to tell me what you see. Once we take this liquidity, what makes us go higher here? Do we have any imbalances? Do we have displacement? I want you guys to tell me real quick. I already see probably, let me count. 1. I see 2 max, maybe 2. Okay, order block entry. Okay. I see 1 more besides the order block entry. Stop raid, correct. Okay. 1 more PD array. Yep. So we have this fair value gap right here, but this one doesn't line up with our macro, right? So sometimes it's just going to be like that. It's just going to be that way. Sometimes it's not going to line up with our macro, and our macro isn't always going to be. Can that OT be considered another turtle soup? Yes, it can. You can turtle soup this. So you could turtle soup this low right here, or you could, because here's the thing about a turtle soup. A turtle soup, you're not just going in blind. You want there to be something behind that turtle soup. You want it to be either manipulation higher or lower, or you want there to be a PD array that supports the turtle soup. In this case, we have this low right here, right? We have obviously the turtle soup. Let me mark it out. We have this low, but what PD array do you see below this low? Awakening. Like, do we see a PD array over here in this area that supported this price right here? Or anybody? Can anybody tell me? Order block. Yes, perfect. We have this order block here that supported that turtle soup. So this is typically what happens either at the high or the low. Typically we'll have like some random level. Let's just say over here we had this high, and then we had like this big dip down. So let's say we just happen to have an order block right here in this level. So if I'm looking for a turtle soup in this area, I zoom out, I go over here and I see, okay, there's an order block there. I'm gonna turtle soup this because there's a PD array that helps it go lower. How can I trust this is a turtle soup? Can you give us some rules about it? Yes, so that's kind of what I'm going through right now. So a turtle soup, you don't want to go in blindly. You want there to be a reason behind it. So a few things are, like I said, so number 1, you want there to already be a swing high made that generates liquidity. So swing high with liquidity behind it, or this is still part of number 1. Within that swing high, you want there to be a PD array.
This for me?
Yeah.
PD array above or below it. So what does this mean? So for example here, we had this. I believe this was CPI right here. This candle. So within this candle right here, we had people wanting to go long and people wanting to go short. So everyone that went long here made money, right? And once everyone that went long made money, We came down for a retracement, and then everyone that went short in this move right here, where did they put their stops? They put their stops up here, right? So once they put their stops up there, we get market open right here at 9:30 at this low, and at 9:30 we had this called the Judas swing, and this is typically happens at 9:30. And we could honestly go over every day this week. Every day this week, there's been a Judas swing at 9:30. There's always been manipulation at open. So in this case, we had manipulation from this low to this high. Everyone wanted to go long, right? Because they saw the CPI candle. They was like, oh, the CPI candle's bullish. I'm gonna go long. So everyone went long. They made money. So there was liquidity right here. So liquidity, you want liquidity to be behind your turtle soup. So since there was liquidity behind our turtle soup, since there was liquidity behind our turtle soup, which in this case it was here, the circle. Pretend the circle is everyone stops. You want to soup right there. Obviously, you don't blindly soup it. What you want to do is you either want to... I gave it a couple seconds. So, as you can see, I didn't enter, like, if we go back to the video, I didn't enter right, like, right there. I entered, like, a bit above it. This was my entry was at 44.18. So if we go to this chart and we go to the 44.18 level, 44.18, my entry was at that black line right here. So what I did is I let price go above it, and I let it, I let it do its thing. But sometimes you just gotta press the button. Like in my case, I'm gonna be super honest with you. I didn't know if this was gonna keep going higher. It could have kept going higher, but I said, I mean, that's the thing about a turtle soup. It's high risk. It's not a low risk entry. A turtle soup is very high risk, and you're kind of risking the chances of it just to keep going higher. And sometimes the market will just keep going higher. So this is a high risk, high reward entry. The fair value gap is your low risk. You're still your low risk, high reward entry, but you're not going to be getting as much of a move. So a turtle soup, you want it to do its sometimes it'll just go one tick above, or sometimes it'll go 5 points above. So that's why I waited for it in this case to go a little bit higher before entering. And going back to our rule set, so you want there to be a swing high with liquidity behind it, or a PD array above or below it. And number two, but behind a turtle soup, the reason you can trust a turtle soup is, well, you can say there was let's see manipulation, let's say power of 3. I was gonna say manipulation, but power of 3. So a turtle soup, you want there to be a power of 3 behind it, or a Judas, which is going to be your manipulation. Wow, that is very poorly spelled out. Okay, so equals manipulation. If you find a turtle soup with manipulation, you're set. Because if you know that you enter your turtle soup with manipulation behind it, for example, in my case, that's why I took mine. I didn't take it because there was a PD array above or below it, because there wasn't. This is just a drawing. Let me get rid of this. So I didn't take mine because there was a swing high with liquidity behind. Oh, actually there was a swing high, but that's not the reason I took it. Reason I took mine was because of the power of 3 manipulation, the Judas swing, which is this right here. So once you know there was manipulation here, then you can take the distribution lower, which in this case it was this. And did you see how in the video I wasn't targeting some crazy low like down here? I was targeting something called, well, we just went over this, the low-hanging fruit. So this is the video. I was targeting 4,400. And from this move lower, the low-hanging fruit is right here. Right there. That's your low-hanging fruit. So the reason my limit order was sitting here was because that's the low-hanging fruit from this leg lower to the retracement higher. But this is the big low-hanging fruit. So I'm not targeting, some crazy low. I'm just targeting the nearest low that I can see, which is in this case is this one. And it hits it right there. So your target should always be very, very, you don't want to be greedy with your targets. So this, yes, so man, we got really sidetracked there. So yes, this could have been a turtle soup right here. And we also had the turtle soup with OTE behind it. Remember, we were in discount. Like higher, retracement lower. And then if we draw out this order block, like Sufane said, we had an order block. Which one was it? It was this one right here. It was tapped into twice. We tapped into it once. We tapped into it twice. Now, how come I chose the wick instead of the body this time? So if you guys watch the A through Z guide on the second episode, order blocks, he talks about you should only use the order block, the wick of the order block, when it aligns with the fair value gap. When the order block is alone, you should only use the body, the open of the body. In this case, it's the open. For a move down, it should be the, where is it? Well, it should always be the open of the candle, whether the candle's higher or lower. But the wick, the wick aligns with the fair value gap, it's going to be the wick. If it doesn't align with the fair value gap, it's going to be the open. And as you can see, it respects it twice, and we head higher to our high up here. So that is our macro, our second macro, our 10-10 to 11-10. So if we would have missed, if we would have only traded this macro, we could have entered right there at the order block, right to the tick. And now that I see it, this order block holds up for these two as well. Right there. So that's a very strong order block since it's held up very strongly right there. And I just saw this right now, so you see how we have all this liquidity here, right there, right here, and right here. What are those? What's that called right there? What are all those lows called? Perfect. Yep. Yep, they're called equal lows. So equal lows are a great target if you enter a position, because equal lows are equal highs. So let me change this to equal lows. So now that we have equal lows, think of everyone that's trading like retail concepts, think of them as putting their stop loss down here. So there's a bunch of liquidity here, right? So what does this mean? So now that we have a target, now that we have drawn liquidity, we can the easiest part is finding the entry. So now that we know that we want to target these equal lows, where could our entry be in this time frame right here? So we can also use the silver bullet, or the silver bullet hour, which is from 14 right here. Let me make this red real quick. So if we make that red, let me put down the opacity so it's not that high. Alright, so from 14 to 15 is our PM session silver bullet hour. Now, I already see a few PD arrays we could have entered. We have opening price at 130 Judas. You are correct, yes, so 130 right here. So this is our opening, our true open of the day at 130. And what do you guys notice up here? What did this high do in relevance to this high? Are those equal highs, or do you think something happened up here?
Where you go then?
That is another turtle soup we could have used. Right there. So you could have entered this turtle soup knowing, targeting these equal lows. You could have also, like Sufane said, we have the opening price at 130, which is this red line right here. We have the Judas going higher. Okay, we have accumulation, manipulation, and the distribution, right? So if the opening price is at 130, and you know price is going to go lower, you want to see your Judas to go higher. Once the Judas goes higher, and you want to trade the silver bullet hour, let's zoom into the silver bullet. If we're targeting the equal lows here, in this leg lower here, do you guys see any PD arrays we could use? I see a few. I see an order block. I see a breaker block. I see a fair value gap. Let me mark these out real quick. So we go lower here, and this is called break of structure, market structure shift with distribution right here. In this distribution leg, swing low with fair value gap, correct. We have this fair value gap. And we have this right here. This is your breaker block. And what is a breaker block? So we have this high right here, right? And then we have this higher high taking out this liquidity. So your breaker block becomes this right here. We reject that right here. So something like this. This is your entry right there. Distribution lower. Swing low with fair value gap. You could enter here. And then targeting the equal lows. So you have two entries here. One is a fair value gap entry. One is a breaker block entry. So that's how you can use time. Going back to our first couple questions, that's how you can use time with price to find your entries. Because once you have time in place, once you know what time frames you should trade, then you know what levels you should trade at. For example, this fair value gap. For example, this breaker block. For example, this turtle soup, or this turtle soup, or this turtle soup. Where was it? Down here. We have multiple entries throughout the day. You just have to know what time frames you should trade on, because you can't trade at regular times. You have to trade at specific times. And let's go over to Rafa's question, because I know Rafa asked a question. He said, "Can you explain the IPDA and the CBDR?" Yes, I can. Nice price delivery, right? That's what I'm saying, Sufain. This price delivery is crazy. Like, Tuesday was a very, very nice day to trade. Very, very nice. Very, very nice. Give me 1 second. I'll answer your question, Rafa. I'm just getting back to someone real quick. Questions, let me know in the general chat so I can get back to you once I finish answering Rafa's question. Alright, Rafa, real quick. You're asking me what IPDA stands for, or what does IPDA do? Like, how can we use it? Okay. So, the IPDA is more of a higher time frame. You want to use it more higher time frame. For example, the daily or the weekly chart, because it's going to give you your bias. And once you know your bias for the week, then you know when to enter or when to exit. So you want to be using IPDA in confluence with your weekly. So for example, I believe it was last week we had a beautiful IPDA delivery. Let's go to the daily actually, my bad. Or the 4 hour. Let's remove our drawings and let's see. Okay, let's quickly mark out. So this was the week of the 5th. I did not mean to put that there. Alright. So So from here to okay. So IPDA, it can be very complicated, but you just want to be looking for your weekly profiles, and I have these posted on um on the study zone. Alt V. Oh shoot, that's cool. I didn't know that. Yeah, I just pressed the little button down here, and then press it right there. Damn, I didn't know that. Alt V. That's sick. Bet. All right, that was super cool. So, IPDA goes with the weekly goes with the daily goes with power of 3. So, how do we know our bias for the week? Let's start with power of 3 real quick. So, Alt H for horizontal. Damn, I didn't know that. Thank you. Bet. So, if we use our opening price on Sunday, you always want to, so if you're determining your bias for the week, Sunday's opening price is going to be your price you want to be looking at. So this is going to give you your price for the week. So this is the week of the 7th. So Sunday the 7th to Friday the, no, this is actually wrong. These are 2 weeks. Okay, there we go. Alright, I was tripping. Alright, there you go. So this is our week right here. So let me bring my highlighter out, and we're gonna highlight a few things. So we have Sunday's opening price, okay, and we have a few things we can see here. So if you know your weekly profiles, then you know that Tuesday or Wednesday is going to create either the high or the low of the week. Okay, keep that in mind. Tuesday and Wednesday can create the high or the low of the week. That's super powerful knowledge right there, because if you know that Tuesday and Wednesday can create the high or the low of the week, then you know that Thursday and Friday can create the expansion. So in this scenario, we can see that we have Monday's trading, which was very choppy. Tuesday's trading, we made what? We made the low of the week, right? But how do we know it's going to be the low of the week? We can decide it on a few things. So, let me take out my highlighter. It's going to be right here. So the reason you know so you want to be trading mainly on Thursday and Friday, because Thursday and Friday are going to be your expansion days. So the way you know Tuesday is going to be your low of the week is what happens on Wednesday. And whatever happens on Wednesday is going to give you a tell if Tuesday is going to be the low of the week or the high of the week. In this case, we have this move lower, right? So we came lower, and then we have Tuesday. And then Wednesday we do what? We go higher. But where does Wednesday close? Wednesday closes right here. So since we know that Tuesday is the low of the week now, so after taking this liquidity, once we take this liquidity right there, Tuesday made the low of the week, we expanded higher, then we want to look for an imbalance after the expansion. Okay, and this will give you your ultimate bias for the rest of the week. So Thursday and Wednesday, if you're trading Thursday, then you want to be looking for what imbalance do we see here on the 4-hour. We see a fair value gap, and we see, it looks like we have a breaker block as well, right here. That's our breaker. So that breaker lines up with our fair value gap, and we have higher prices. So IPDA is it's very complicated, but I mean, you just want to be determining your bias for the week. And let's see with CBDR. CBDR. So I know someone on Twitter that uses this. His name is ICT Concepts. Some old guy. He uses the daily range, and the market likes to book at, like Sufain said, it likes to book at ranges. So 20, 40, 60 pips or ticks, and typically it does this during specific time frames. So for example, like macros. So this goes back to macros. Look at this immediate rebalance and how we respect it and go higher. Exactly. Yes. You're right, Sufain. Yeah, so the daily range it's another complicated topic, just like the IPDA, but it gives you more of an idea where we can go at specific times. So, for example, if we knew that we were going to head to this high right here. So, if we knew that we were going to head to this high, we should expect Tuesday to make the low of the week.
No, Monkey Boy's drinking water.
Then we should expect
You want to put a thing on him.
then we should expect Thursday. So we should expect Tuesday to make the low of the week, and we should expect Thursday and Friday to complete our target objective right here. So that's how we can use the daily ranges. For example, if we go on the daily, right here, and we're bullish, we know that Tuesday made the low of the week, then we should know that Wednesday, Thursday, Friday should make the high of the week. It's vice versa. If we know, let's look for a bearish week over here. I already found one right here. So this candle right here is Monday. This candle right here is Tuesday. This candle right here is Wednesday, Thursday, Friday. Tuesday was the high of the week in this scenario. So if we're bearish and we're targeting lower prices, we should expect Tuesday or Wednesday to make the high of the week, and we should expect Thursday and Friday to go lower. That's kind of how you can use the weekly profiles to determine your daily ranges and to give you the bias. And once you know this, it's really been helping out a lot for me recently. Once you really manage your weekly profiles, I'll tag you guys in the study zone. Reply member. I tagged you guys in the study zone. So what I just tagged you on right here, I want you guys to study this. Take notes on it, open it in a new tab, or save it into your computer or into your photos. So this really gives you actually, matter of fact, I can open it in my stream. So shout out to Tiny Vizsla on Twitter for this one. Found it on Twitter, and this is how you can determine your weekly ranges. So it gives you 3 sections here. It gives you your seek and destroy section, which is your choppy section. It gives you your consolidation section, and it gives you your classic section. So in the classic section, what we just talked about was your classic Tuesday low of week or your classic Tuesday high of week. So it gives you a bullish scenario and a bearish scenario. Wednesday, so like I said before, Tuesday and Wednesday can be the high or the low of the week. In this case, Wednesday that gives you the bullish scenario and the bearish scenario, when to expect manipulation and how to anticipate it. Consolidation Thursday reversal. So consolidation Thursday reversal is typically when we consolidate Monday, Tuesday, and Wednesday. Thursday will create the high or the low of the week, and then Friday will be the displacement after. So if you see that Tuesday and Wednesday haven't made much of a move, like in this case where we had Wednesday make a very large displacement. So let's say it kept going choppy sideways like this, and we kept going, then we would expect Thursday to create the manipulation and then the distribution. But since Wednesday already did it right here, then we expect Thursday to continue it with Friday. And I can zoom in, down, that's sick. Okay, and then we have our midweek rally. So, it tells you the bullish, just study this, guys. This will really give you a good bias on the days. And once you have a bias, then you can really get some nice liquidity targets. And it's all in the study zone. Like, I feel like a lot of people overlook the study zone, but it's all in there. Like, all the sauce is in there. So everything in the study zone is very, 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 very valid. And it's all stuff that I like to go through. So yeah, let me get rid of everything on my chart, make it look clean. Yup. Yup. For anybody else that just joined, do you guys have any questions? I do plan to. We've been doing this for an hour and 30 minutes. An hour 30 minutes of straight sauce, dude. This coming week, we're gonna, cause tomorrow markets are closed, by the way. For anyone that hasn't, well, we open, but it's a bank holiday, so expect it to be mad choppy. Speak is bullish. Yup. Yeah, so tomorrow, expect it to be, we're gonna close early. It's gonna be an early close at, I believe it's 1. So yeah, we can do a quick analysis if you guys want. Quick little analysis. Learn so much from this, dude. There's so much more to learn, bro. Like this is just the beginning. Like, for all of you guys that joined, I know Awakening joined the Alpha VIP, but me and him, we're gonna hop in a call. I'm gonna give him so much more sauce. Like this is just the start, bro. Yes, I'm recording it right now. So if you want, Awakening, I could send this recording to you because you're an Alpha VIP. But if you guys want to join Alpha VIP, I mean, we can do one-on-ones, and it's like even more sauce. Yeah, I got you. But yeah, we can quickly do an analysis on where I think we can go real quick. So I'll do this analysis, mark down some levels, starting with the weekly, and then we'll go down to the daily, the 1 hour, the 15-minute. But yeah, I mean, we just went over. So quick recap on what we went over. We went over one. We went over the 2022 model and my checklist on what to look for in the silver bullet. You want to look for 3 things. You want to look for liquidity to be taken first, higher or lower. You want to look for a break of structure with displacement or a market structure shift. And number 3, you want to look for an imbalance within that displacement, whether it's an order block, whether it's a fair value gap, whether it's a break block. Number 2, we went over how to find fair value gaps that are valid, how to find order blocks that are valid, how to find turtle soups, and really what makes them valid. What other thing did we go through? We went through IPDA, we went through CBDR, how to find daily bias and weekly bias. We went over how to find hunt on stops, or a stop rate, whether it's higher or lower, whether it's equal highs or equal lows. That's when you know stops are going to be targeted. Right, Sufan. Yup. Yeah, guys, if you guys overcomplicate things, it's going to be even harder for you. So the more you overcomplicate it, the harder it's going to be. So don't even stress this. This is very, very simple. It's simple. Keyword simple. It's not easy. It's simple. Very easy to learn. But it depends who you're learning it from. Do you use standard deviations, and where would you use them? Yes, so we also did go over that, how to use a fib, Rafa. So real quick, I'm going to show you how to use them. Let's use Friday. Let's use Friday real quick. So standard deviations, if you go to YouTube and you go to the ICT Market Maker Primer series, which is going to be Market Maker Primer course, not the Primer series, my bad. And you go over to the OTE Primer Intro to ICT Optimal Trade Entry, episode 18. This is going to give you your fib settings, and he's going to go over how to target standard deviations. So you can learn it from me right now, or you could go straight to ICT. I'll give you a quick overview on it, but I would recommend watching this video. So basically, it gives you your range, right? So like CBDR gives you your dealing range, and your dealing range is going to be the leg of price that price is going to displace lower, right? So like, let's say we have this leg right here. So this leg starts here and it ends here. So once the algorithm completes this leg, what's it gonna do? It's gonna retrace and seek discount, or in this case premium, because we're going lower. And where do we retrace to? We retrace to OTE, stands for optimal trade entry. OTE is gonna be, like I said before, in the intro to ICT optimal trade entry. He's gonna tell you that how to mark out your OTE, and it's gonna be these levels right here, 0.62, 0.705, and 0.79. So these levels are going to be your optimal trade entries, and look exactly where we go to. We go to OTE right here and right here. And that's OTE right there. I've seen those, but do you use them on Asian session, manipulation, or other zones? Yes, I do. I actually, matter of fact, I use them during my trades. Like, I want to see if I can find... Here, maybe it was this one. So in this case, let me pause it. So if my entry was here, and I'm targeting, let's say I'm targeting a low, what I would do is I would draw the fib out right here to the low, and then that would give me my fib, right? And then I would target either the low hanging fruit, which is here at that level. Here, I want to see if I draw it out so I can give you guys an example. So you see I put my limit order right there at that low hanging fruit, but it looks like I don't use it in this example.
Is he sleeping on pushing?
Okay, look, I did use my fib right here.
Alec.
So what I did here in this example, I paused it, but you see how my fib is at from this high to this low, and OTE at the time I had them in purple. So these purple levels right here is my OTE. So what Price did is we had this leg lower, we retraced into OTE, and once we hit OTE, we went lower. So where would I target? I would target, obviously your first target is going to be 0, and then it's going to be the low hanging fruit, which is where I have my 4 limit orders at. And typically the low hanging fruit is where I have most of my position at. And then if I have runners, for example, I have 4 limit orders sitting here. So if I have runners, I'm going to set them at 0.5 or 1, or in this case, sell side liquidity. But let's see what I do here. Right there. So liquidity gets taken there. That's my first partials. I have 4 left.
Come on, let's go down a bit.
And the low, it looks like the low was made 41.17. So I wanna replay this video, and I wanna see where does 41.17 line up with the half standard deviation of our fib. Let's see if I can get her here.
Yeah.
I missed it. But yeah, so you would target the half standard deviation with any positions left. So for example, in this case live, yeah, so you would you enter here at OTE, you target your low hanging fruit, which is going to be here. This is your low hanging fruit. That's going to be, or you could even target here. So your target would be, let me highlight it, here and here. And if you have any positions left, let's say you have 1 contract left and you're like F it, you know, whatever. I'm gonna let it run. You would let it run to this level here, half standard deviation. Or if you're feeling really ballsy, you would let it run to 1, 1.5, 2, or 3. So that's how you use the standard deviations. But you always want to be, you can never be too safe. You always want to be exiting the majority of your position at the low hanging fruit, which are going to be these 2 levels here. But if you guys go in my, oh, I actually have it, so I have a buy and sell alert channel, but I'll show you guys how I actually use this. I'm going to tag you guys in general chat, but this was a trade I took and I signaled it, and you can see my my fib there, and I have TP1, TP2, and TP3, and these are all standard deviations. and the standard deviations are on the side right there. So half and full 1 right there on this on the right. So obviously we have our fib right here from the high to the low. We entered OTE right there at those purple lines, and then we went lower. So TP1 would be at our low hanging fruit, TP2 would be at half standard deviation, 0.5, and then TP3 would be at 1 standard deviation. So that's how you use the fib to find your standard deviations. So it's mainly, the fib is mainly, or your standard deviations are mainly used for when you're in the trade and you're just looking for targets. You know what I mean? You're not really using them to find like levels or anything. Like, you know how people use like the Fibonacci levels or Fibonacci retracement zones, like it's like an indicator to where like price can like bounce off of? Like, they do work, but I could just use them as levels, like, because if you use them as levels, that's where most likely price will target. But Sufain said, what's your bias for the week? For me, it's still bullish. If you look at the DXY, we want to go lower, so to take out this old consolidation. So let's go over to the dollar real quick. And let's go to the daily. So on the daily, it looks like we have some equal lows, and you're right, Sufain. So if we have these equal lows here, honestly, it looks like we took them out. Hold up, let me turn on my magnet. Okay, so it looks like we took them out right there. Right there. But it looks like, from the looks of it, if I take my OTE, it looks like we're entering optimal trade entry with an imbalance here. So we could potentially enter this imbalance on the dollar. That fair value gap right there. We could take out that fair value gap. So maybe, so from the looks of it, it looks like we could go lower. What does that mean? That means ES higher, right? So if ES goes high, so Tuesday could be our ES high of week. And then Wednesday, Thursday, Friday, if dollar goes higher, that means Wednesday, Thursday, Friday, ES could go lower. You guys know what I mean? Did you guys get that? So the dollar is opposite of indexes. So if the dollar goes lower, ES goes higher. If the dollar goes higher, ES goes lower. But if the dollar goes higher and ES goes higher with the dollar, then that means ES chops if they're both doing the same thing. So the dollar is a very good tool. It's more of a tool to look at. Exactly, risk off, risk on. You are right. This is what ICT talks about. So this is a good tool to look at when you guys are when you're trading, really, because if you're in a, why did you not mark the fib from the lowest? Oh, from this wick. So your fib is going to be used from the swing that made this displacement higher. For example, this swing right here, that swing right there, it only went up to this high, and then we came down. And then this swing right here, it only went up to this high, and we came down. But this swing right here, this swing was the swing that made it go all the way up here. So this is where you take your fib from. Oh, I just messed it up. There you go. This is where you take your fib from. You take it from the swing low, or the swing high. In this case, it's the low. You want to take it from the swing low that made the move higher. Yeah, I got you, bro. Yeah, so but if you're short term, this is on the daily, but if you're short term and you're only looking for like a tiny move, then you would take it from this swing. But we're looking at a bigger move, so we take it from the lowest low, from that low that made the. And then in this case, you would target on the dollar. You would target these standard deviations right there, right there, right there. Obviously, it's not going to be moving that crazy, but that's how you use the fib. But yeah, in another class, maybe next week, I could show you guys how to configure your trading view settings. Or you could even just search it up on YouTube, how to configure your trading view settings to where you can go to template and you just set it to like half. Let's say you're only trying to look for premium discount and you only want to know where the 50% is, then you set it to half. So this is the premium and this is the discount. So this entire area here is your discount and this is your buy zone, I guess you can say. So, yeah, guys, if you guys have any more questions, let me know before we call it a night. This class has been going on for 2 hours. I might edit it, probably take out some. Oh no, I'm gonna leave it. I'm gonna leave it raw, just raw file. So, I still gotta edit a trade I took on Friday. So, if you guys have any more questions, let me know before we call it a night.
Smile.
Smell.
Smile.
And if not, if you guys really did enjoy this this lesson, I mean, I one for one. Like first of all, I really thank you guys for joining, like for being active. I really see you guys. For those of you that are active, I see you don't go unnoticed. So, because I just started this Discord, I'm trying to like run it up. So you know we're gonna become big. Like trust me. Like we're gonna run this up. Yeah. So we about to be like the best of the best. I'm not even playing with you. So if we can all learn ICT together, we can all grow together. That's the best part. We want to all be equally the best. Thank you. No, thank you for your time, brother. I love teaching this, and I'm always happy to help. So if you guys have any questions, let me know. And if you guys don't mind dropping a little comment and testimonials, I'd appreciate it too, so like we can get that channel run it up. But yeah, so yeah, if you guys want more education like this and more just like one-on-ones, make sure you join the VIP. We can, I mean, even like if you need anything during the day after, it doesn't only have to be on Sundays. Let me know. I'm always free to help. But if not, I plan to start doing these classes every Sunday. So, or if you even just want to join the alerts, if you just want to join live call, you don't want the one-on-ones, I also have the alerts for half the price. So,
Those ties though.
but yeah, I mean, I'll catch you guys on Tuesday, because Monday, tomorrow, we are closed. Market is closed. So Tuesday, we'll run it up. For those of you that are going to be in the call, that have alpha alerts or alpha VIP, I'll see you guys in the call. But if not, I'll catch you guys in general chat. But I will, yes, bank holiday tomorrow. So I will see you guys on Tuesday. And Awakening, I'll catch you in the DMs, big dog. Have a good night, everybody. W's in the chat real quick. W's in the chat. This was a beautiful class. W's in the chat. Everyone, W. W's in the chat. Let's go. Let's go. Bet. Alright, well, thank you guys for joining. I appreciate you guys' time, and I'll catch you guys later. Peace. Have a good night, everyone. Enjoy the rest of your weekend, and happy Father's Day. Make sure you guys say I love you to your dad today. Alright, peace, guys.